Hi everyone, welcome to All Things Accounting. Today's topic is going to be the accounting equation. So I'll take you through all the different components and the finer nuances of it, and we'll go through the whole journey together. So stay tuned. Okay, so the accounting equation. Oftentimes people say that accounting is the language of business. So what is meant by that? Well, if you're going to run any type of business, either small to large type of business, you have to have a certain minimum understanding of accounting, because that is the tool that you're going to need in order to prepare such things as financial statements, such as the balance sheet and income statement, and that will be a great useful tool in understanding where your financial position is and how well you're performing as a business overall. So when we talk about the accounting equation, there are certain three elements that we have to take into account. Okay, so first one are assets, and I will expand on that a little more. Expanding upon this accounting equation, we have assets is equal to liabilities plus equity. So if you look at this assets equals liability plus equity, it's an equation. The left side must equal to the right side, just like simple mathematics, where we have 4 is equal to 3 plus 1. It always has to balance out. If something does not balance, that means that you've gone wrong somewhere in closing entries, adjusting entries, which we'll go through at a later time, or in one of the other tutorials that I'll be posting. So always keep in mind that it has to be like a balancing scale. Examples of just a brief overview of assets are such things as cash, accounts receivable, which oftentimes we call AR just for short. Other things are prepaids. For example, prepaid supplies, prepaid insurance, and we'll go through the accounting of that in its own tutorial. Other things is notes receivable. Now, on the other side, we have liabilities. Such things are payables, such as accounts payable, also known as AP, or notes payable. We also could have such things as long-term liabilities, a mortgage payable. It depends. It's anything that you're legally obligated to pay. Now, of owner's equity, here we can break that out into capital or investment, or owner's investment. We could look at how much they taken out for certain different things. So anytime that you're taking out money, so those can be withdrawals. And then there's a component where you have to account for such things as the income statement, components of the income statement, where it would be revenue, revenues, and expenses. And those will be in its own tutorial by itself. So just right now, it's just a basic overview of how assets and liability can equal liability plus equity. So always keep in mind that they have to balance. If they're not balanced, then you're going to be having to go back and figure out where you went wrong in your adjusting entries, closing entries. But this is the key to the basic fundamentals of accounting. So Please remember to subscribe to this channel and click the bell notification icon so that you can be always kept up to date on my new tutorials that I'll be posting in the future. Thank you for watching.